Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Hillenbrand Inc. annual report. Hillenbrand Inc. offers a diverse range of businesses and services through its two main segments, Advanced Process Solutions and Molding Technology Solutions. The company's Advanced Process Solutions segment provides various equipment and solutions for different industries. These include compounding, extrusion, and material handling equipment, as well as mixing technology, ingredient automation, and portion process systems. Additionally, the segment offers screening and separating equipment, aftermarket parts, and service for industries such as plastics, food, pharmaceuticals, chemicals, fertilizers, minerals, energy, recycling, and general industrials. The Molding Technology Solutions segment focuses on providing injection molding and extrusion equipment, hot runner systems, process control systems, mold bases and components, and maintenance and repair services. These solutions cater to various industries including automotive, consumer goods, medical, packaging, construction, and electronics. Overall, Hillenbrand Inc.'s diverse range of businesses and services enables it to serve a wide array of customers across multiple sectors. The stock price of Hillenbrand Inc. has remained relatively stable in the past year due to a major corporate event that established a clear value for the company's shares. In October 2025, Hillenbrand announced its agreement to be acquired by Lone Star Funds for $32 per share, which caused the stock price to trade closely around this acquisition price. This premium of approximately 37% over the unaffected closing share price on August 12, 2025, and a 53% premium over the volume-weighted average price for the 90 days ending August 12, 2025, solidified the trading range near the agreed-upon acquisition price. The shareholder approval of the acquisition in January 2026 further moved the transaction closer to completion, which is expected by the first quarter of 2026. Prior to the acquisition announcement, Hillenbrand's operational profile and valuation were influenced by several events in 2025, including the divestiture of a minority stake in TerraSource Holdings, refinancing of its credit facility, and quarterly earnings reports that provided updates on the company's financial performance. The stability in Hillenbrand's stock price can be attributed to the definitive acquisition agreement with Lone Star Funds, which established a clear value for the company's shares. The premium offered by the acquirer has solidified the trading range near the agreed-upon acquisition price, resulting in minimal fluctuations in the past year. Hillenbrand Inc. maintains a market capitalization of $2 billion, broadly in line with the industry peer group. Hillenbrand Inc. trades at a higher price-to-earnings ratio of 52 times and a lower price-to-book ratio of 1.62 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The leverage on the balance sheet appears elevated, with liabilities of 68% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 2.86%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline are multifaceted. Successful operating company performance is a key factor, driven by profitable organic and acquisition growth, strong cash flows, improved return on invested capital, and the introduction of innovative new product offerings. This approach enables companies to expand their market share and increase revenue. Additionally, strategic acquisitions that meet specific criteria can also drive revenue growth. These opportunities must generate profitable revenue and align with the company's overall strategy. Furthermore, developing scalable platforms to drive growth, and implementing organic growth initiatives, such as penetrating growing end markets, are essential for sustained revenue expansion. Strategic investments can also play a crucial role in achieving outpaced growth versus market. By focusing on these key drivers, companies can effectively manage their revenue growth or decline and maintain a competitive edge in the market. The net income of the company underwent a significant fluctuation over the 2-year period. Initially, it decreased from $135.8 million in 2021 to $123.4 million in 2022, indicating a decline in profitability. However, this trend was reversed in 2023 when the net income increased to $145.6 million. A similar pattern is observed in the profit margins of the company. The profit margin decreased from 8.2% in 2021 to 7.5% in 2022, suggesting a decline in efficiency and profitability. Nevertheless, this downward trend was halted in 2023 when the profit margin increased to 8.5%, indicating an improvement in the company's ability to maintain its pricing power and control costs. The reasons behind these changes are not explicitly stated, but they may be attributed to various factors such as changes in market conditions, competition, or operational efficiency. Despite the fluctuations, the company has managed to improve its profitability over time, which is a positive sign for its future prospects. The company's financial performance indicates a strong ability to generate cash from its core operations. A key indicator of this is the operating cash flow, which measures the amount of money generated by the business through its normal operations. According to the provided information, the company has achieved an operating cash flow of $145 million. This positive operating cash flow suggests that the company's revenue and expenses are well managed, allowing it to generate a significant amount of cash from its daily activities. This is a crucial aspect of a company's financial health, as it enables the business to invest in growth initiatives, pay off debts, and reward shareholders. The performance of various segments and regions in the industry has been mixed, with some showing significant improvement while others struggled to keep pace. Segments that performed well include Acuity Brands, Inc., which demonstrated strong growth across multiple metrics. The Molding Technology Solutions segment also excelled, driven by revenue expansion, improved EBITDA and cash flow, geographic expansion, and enhanced technology and operational performance. Atlas Group and Cummins, Inc. also reported notable gains, with the latter's sales and purchases both increasing. On the other hand, Dover Corporation, Fortive Corporation, Regal Rixnord Corporation, and Barnes Group, Inc. struggled to match their peers' success. These companies failed to demonstrate significant growth or improvement in key areas such as revenue, EBITDA, and cash flow. Infosys Limited was a notable exception among the poorly performing segments, with its substantial revenue of $3,890,000 standing out from the rest. Management is actively working on building a strong foundation for the company's future growth. They are focusing on developing scalable platforms and identifying strategic acquisition opportunities to drive expansion. Additionally, they are prioritizing the development of a diverse and inclusive talent pool that aligns with the company's purpose. In order to create long-term shareholder value, management is encouraging directors and executive officers to own stock in the company over an extended period. This approach demonstrates their commitment to creating sustainable growth and returns for investors. By building a strong foundation and fostering a culture of ownership among key stakeholders, management is positioning the company for success in the years to come. The company's dividend policy has been confirmed through various sources. According to page 20 of the extracted summaries, dividends do accrue on shares underlying RSU awards based on the increase in shareholder value. This indicates that the company does pay out dividends to its shareholders. However, there is no concrete evidence to suggest that the company engages in share buybacks. Pages 20, 22, and 27 all indicate a lack of information regarding share buyback activities. As a result, it can be concluded that while the company pays dividends, there is currently no information available on its share buyback policies. That concludes the financial summary for Hillenbrand, Inc. Feel free to comment below, and I will be happy to answer them when possible.